Hello, my name's George and welcome to this week's Rational Thinking. This week we'll be looking at the UK services PMI data and also the strong employment data that came out of the US last Friday. This week in sterling we saw the release of the UK services PMI data, which came in at a disappointing 50.2, way below expectations. 50.2 is a particularly worrying figure for the Bank of England because it's very close to the no-growth level of 50. This follows on from some poor manufacturing and construction data, which have both seen contractions recently. Again, underlying fairly poor performance in many sectors across the UK economy. This followed on from a speech from Governor Carney on Tuesday, where he mentioned that there was many risks associated with the no-deal Brexit, which we already know, but he also talked about how underlying growth in the UK had been way below its potential. Again, what we would like to see is some kind of alleviation of a no-deal, and we should see the economy start to recover. In the Eurozone this week, we had two fairly key nominations within the governing body. We had the nomination of Christine Lagarde for the ECB president, and also the nomination of Ursula von der Leyen for the head of the European Commission. Outside of that, very quiet week in terms of data, but we did have the Governing Council member, Olli Rehn, talk about the recent slowdown in the Eurozone, and he said that this recent slowdown should not be considered a temporary blip. Instead, the ECB's main economies, being say Germany and France, have started the year with very disappointing data, and this has been further exacerbated by recent global trade tensions and also political uncertainty. The US was very busy in terms of data last week. Initially, this came out fairly weak. We had new orders for US-made goods actually fell for a second straight month, and then we had the US trade deficit actually jump to a 5-month high. Both of those figures were likely due to the fact that there was increased stockpiling of Chinese-made goods in anticipation of the increased tariffs that should be coming fairly soon. To end the week, we then had a very strong employment data from the non-farm payroll headline figure. This actually increased by 224,000 jobs, which is the largest increase we've seen in the last 10 months. However, persistent moderate wage growth and some underlying signs that the economy is actually struggling could still convince the Federal Reserve to look at cutting interest rates. This week in the Eurozone, we have the non-monetary policy meeting for the ECB on Wednesday. And then on Thursday, we have the German Harmonized Index of Consumer Prices, which is expected to be unchanged at 1.3%. In the US, we have a little bit more data coming out. But firstly, we have Fed Chair Powell speaking 3 times throughout the week, testifying twice. We then have the FOMC minutes being released on Wednesday. And then to finish the week, we have the Core Consumer Price Index. Month on month is expected to rise to 0.2% versus a previous of 0.1%. And then we have the release of the year-on-year figure, which is expected to be unchanged at 2%. Thank you for tuning into this week's Rational Thinking. As ever, if you have any currency requirements or would like to find out a little bit more about what's coming out this week, please feel free to get in touch at any time.